It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And we're back with Trading Stocks Made Easy. Hello, it's Tyrone Jackson, the wealthy investor. Let's talk about being prepared to be rich in the stock market from 2023 on. Hello there. Nice to see you again. You can't see me, but oddly enough, I can see you. Think about that for a second. Hey, let's talk about what's going on in our stock market because I want to help you, as always, create wealth and financial freedom for yourselves. Let's talk about some of the trends that are going on in the market right now. Before I talk about the trends, I want to talk about you, your mindset, and your belief systems. Because we know, if you listen to the show on a regular basis, one of the things you understand is that all of the money that you earn in this lifetime is based on what you believe to be true. So if you believe there is no residual income coming your way from the stock market, guess what? You will be correct. But if you keep that open mind about creating wealth and residual income, you will be correct. So it's really your mindset that determines everything as it relates to money. So let me tell you what a lot of my students right now are doing. It's very common that people are earning between $10,000 and $20,000 a month selling covered calls. Why? We are in a market that is rising, and we are in a market that is going higher. What's happening at the time of this recording is the Federal Reserve is raising interest rates to hold back inflation. In fact, we just got CPI numbers out today that shows that inflation is at all-time low, down to 4.9%. If you're following economics. But what you want to know is what stocks are going higher, how quickly, how fast, and how can you make money from it, right? Well, it turns out you can't really just make money if you don't have an education contextually, if you don't understand what's going on in the world. So if you have an open mind, let's continue on with this show, listening together, because I want to help make you richer than you are. In fact, if we really think about it, I want to make you rich multiple ways, both in what we call your cash account, stocks that you're holding, and in your retirement account. Now, let's take a little bit of a deeper dive into what is going on. We're hearing a lot of talk in the stock market about which company is going to be the most successful when it comes to AI, artificial intelligence. So I'm going to tell you the truth right up front. None of us know what companies are going to be successful using artificial intelligence or chat bots, okay? So just because there's a new trend as it relates to technology, and here's what I want you to really know, it doesn't mean that our favorite publicly traded companies have figured out how to monetize it. Remember, when you're trading or investing in the stock market or going on dates with great companies, as I like to say, what makes a great company great is that their revenue, the income that they generate on a regular basis, is constantly rising. So when people say, oh my God, who's going to make the most money off artificial intelligence and chatbots, we don't know, because we don't know how that could be monetized. So everything on Wall Street is, hey, it's great that you're using that technology. How do you make money with it? Right? So we know, let's take a look at Apple's iPhone, for example. How do they monetize the iPhone? Well, they get a piece of your cell phone bill, which is the agreement that they make with your carrier. So Apple is very much in the residual income game. Every time you take a picture and it's stored in the iCloud, you are paying for that storage. So Apple created the iPhone with all of these streams attached to it. Now, this is really interesting because the phone manufacturers, right, who manufacture smartphones, also made deals with streaming services. So in other words, when you purchase a cell phone and it comes preloaded with all of this software in it, whether it be Tubi or Netflix, when you sign up using that app that's on your phone, guess who gets a piece of the sign-up fee? Your cell phone company. So I did a show a couple of weeks ago about streaming services. How is it that these streaming services like Tubi now have 61 million subscribers? Because they pre-install their software on hardware devices. Your television set, your smart TV set, cell phones, T-Mobile, any manufacturer of a cell phone goes and does a deal with a streaming service. Why? It's all about creating residual income. That's why when you're signing up for cell phone service these days, they go, we'll give you 6 months of, let's say, Disney Plus for free. Disney is a pre-install on the app, on the hardware device, and the hardware manufacturer gets residual income when you sign up. Did you know that? Right. It's another monetization strategy. So in the world that we live in today, cell phone manufacturers and hardware manufacturers of computers, TVs, they have a back-end revenue stream after they've built the TV. This is what I call in the Wealthy Investor Program a co-relationship, right? When you start seeing how these companies all do business together, Silicon Valley meets the creative world, and they're all frenemies. They've all figured out how to sell a device once and get paid 1,000 times. And this is what I talk about on the show all the time about having a financial education. When you understand what companies are constantly doing business with each other, it makes it easier to say, well, I like those two companies because if one succeeds, the other succeeds. Right? So if today's episode is about getting you richer, it's getting you tuned in to the idea that a lot of publicly traded companies do business together. Do you get that? So when something new comes out like chat AI or artificial intelligence, with Hollywood is so concerned that AI is going to start writing movie scripts and editing the movies, because apparently with this artificial intelligence, not only can the artificial intelligence come up with a storyline in a movie that has a beginning, a middle, and end, put all the explosions in. What we're going to see in the next 3 years is there'll be a software program after that movie is actually shot that edits that film in the style of your favorite movie director. In other words, if software wrote a script and I had the editing software and I say, can you edit this movie in the style of Martin Scorsese? Can you edit this movie in the style of Steven Spielberg? The software will be able to do that. Now, you won't initially be able to recognize in the idea of in the style of unless you went to film school. Right? Because, when Steven Spielberg shoots something, it's from 16 different angles. Martin Scorsese, for example, is master of the push-in. He loves to use shots where he pushes in, close-ups on certain actors, right? These are film techniques that now software is going to adapt to. But even though software can write a movie, it doesn't mean that the public will like it. Even though software can edit a film almost exclusively on its own, coming in the next 3 years, they tell us, it still doesn't mean it's a good movie. However, Hollywood is afraid of that happening because if software is writing and editing movies, what do you need movie stars for? What do you need writers for? Well, the software program you pay for once and you could write 11,000 movies. That process is called disruption, right? So technology disrupts the way that certain businesses proceed and how they make money because software allows us to cut costs. Let me show you another example. If you're using the TD Ameritrade or Charles Schwab platform, you've noticed in the last 6 months that they allow you to trade stocks, buy and sell, for free. 5 years ago, we were delighted at the fact that we were paying $7, $8, $9 per stock trade. So now those companies make so much money that they can give us stock trading for free. But for those of you who are covered call writers, you ever notice there's still commission on selling the options and being called out, right? So they'll give up the stock trades. Why? Because it's software that's running what goes on behind the scenes when you buy a stock and sell a stock. And we all know at the New York City Stock Exchange, there's no more open outcry system. If you've ever seen the old movie with Eddie Murphy, Trading Places, right? And they go down on the floor of a fictitious exchange, there were people going, buy, 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 sell, sell, sell. Well, did you know those floors don't exist anymore? That's old school. The floors are all electronic. So electronic trading desks cut the costs on Wall Street. That was passed on to you as the consumer. And now, again, if you're in Charles Schwab or TD Ameritrade, you don't pay any commission, right? Pretty interesting, right? All right, so let's talk about the companies that we know are profiting in the middle of this disruption. We know Microsoft, which is a member of the Dow Jones Industrial Average and the S&P 500, is disruptive in nature. Why? Because they're one of the companies in the entire world that have mastered this cloud platform. Everything we do is connected to video, music when you're streaming, right? Data, government data. It's all on the cloud, which is basically a series of interconnected computers. For the foreseeable future, Microsoft, this Dow component, is probably going to be the leader in that game. And at some point, if they're not the leader, they're going to buy their competition. That happens all the time on Wall Street. I like to put it in layman's terms and say the big fish always eat the little fish, right? So it's not enough to just go, I want to be involved in AI. The real money that's coming through in terms of revenue these days is in the cloud, because you're charging governments and clients and schools and doctors' office to have their information stored elsewhere for safety reasons, okay? So Microsoft is probably going to be a winner in the cloud for quite some time. Who is next behind Microsoft in the cloud? Who's winning? Amazon. So although you and I as consumers go and purchase products on Amazon, they're the other leader in cloud services through their Amazon AWS. So not only are they winning on their platform, generating billions of dollars in sales, they're also winning in the cloud. So think of the race between cloud providers as almost like a horse race, right? Microsoft is in the lead, Amazon is second, or any given day that can change. And the third company in the cloud is IBM. But IBM is way behind the two leaders. So people go, well, which stock is the best? Well, if you like the cloud services sector, why not own a little bit of every company, right? IBM still makes, well, they used to call it mainframes, but they're still in the hardware business. But they've recognized, hey, we have to get a piece of that cloud thing, right? Right. So every streaming service that you subscribe to, or when you're listening to a streaming music service, they have to be hosted in the cloud. Who are the leaders? Well, Microsoft and Amazon. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
Hey, it's Tyrone Jackson, Wealthy Investor again, and I just wanted to remind you that if you enjoy listening to the Trading Stocks Made Easy podcast, be sure to share it with your friends all across social media, including Facebook, Instagram, and Twitter. If you enjoy hearing about success principles that inspire you, as well as interviews with some of my most successful students, I want to remind you it's right here at the Trading Stocks Made Easy podcast, wherever you get your podcast. And make sure you download as much free material as you want at thewealthyinvestor.net. I'll see you there. Hey, listen, we're back. And if you like listening to the Trading Stocks Made Easy podcast, post it on social. Help out a friend. Let people know that this free show is here to help you get a financial education. Now back to you and getting rich in 2023. This is really important. You see how I am decoding the tech sector? I'm breaking it down to very simple terms so you can say, oh man, if I want to own cloud stocks, because that's where we're going over the next 2 to 5 years, Tyrone says I should own a little bit of everything. Right. I am mentoring you. I am coaching you so that you can make intelligent choices based on what's going on in the marketplace, not just buy cheap stocks because you recognize the name. Like Harley Davidson, ticker symbol HOG. Great company, great brand name, but are they in the cloud business? Are they making billions of dollars every quarter? No. So you could own that company if you wanted to, but that's not really the dominant trend that's disrupting the entire world, right? Right now, you probably at least want to start investing some of your money in companies that are disrupting or the leaders in their field. So let's change our focus here, and I'll show you a company that some people consider to be a leader, but I think it's more of a laggard. And it's a company called Meta, also known as Facebook, okay? So Facebook created something they call the metaverse, and that life was going to take place in this metaverse, and we were all going to love it. Now, personally, I live half the month in Los Angeles and the other half the month in New York. That's enough. I don't need a house in a metaverse. But it was this alternative universe where they were going to create all kinds of things of value that could be traded. They really wanted to create another economy in an alternate universe. And apparently it is not working, okay? It's not working anywhere near as they had hoped. Facebook, or Meta, really makes 80% of its money from advertising. If you have a page on Facebook, you see that you're seeing a lot more ads and a lot less shares. That's because Facebook is really pumping out that ad exposure to you. Why? Because the other company that they bought, Instagram, is killing it with Reels. So every company that provides us a service, what are they doing? They're monetizing that. The services that really do well real-wide, they amplify, and the services that are just okay, that aren't the revenue generators, they turn down. Do you get that? Well, how do you keep track of all of these companies? Well, you have to read press releases, or that's why I created the Wealthy Investor Program or WITradeschool.com, so you would be able to stay up on these trends, right? Because how companies are generating revenue and how they're disrupting, although I give you the simple version here, there's really some complexity to it when you start to look at who makes the most revenue and what division of a company earns the most revenue. Okay? So Facebook is in the advertising business, probably always will be. I don't see myself at all visiting the metaverse, and I'm not sure that you would want to visit the metaverse. But if you like a stock that makes its money off of ads, there you go. Let's talk about what's going on in the advertising space, because the dominator on advertising is Google. When you do a Google search, generally speaking, the first 5 to 10 selections you see on Google paid to be there, right? That's why you would open a Google AdWords account. So in the category or niche or business that you are in, when people go to Google to do a Google search, you want to come up as one of the top 10 choices. And Google has really perfected search, because if you're a plumber in Atlanta and you want to come up on Google, you can do that inside your AdWords account. You can geo-target, as they call it. Google is also getting into programmatic TV ads. So I covered this when I was talking about streaming services, but here's a quick overview. The TV shows that you now see on television are hosted from a server, okay? And the tech world has figured out how to take over Madison Avenue, because the commercials that you see are also on a server, okay? So that means rather than having sales reps who used to sell TV commercial time, guess what? Software does it now, Okay? So if you're in the television business, you know what locations to go to get your commercials on the air worldwide. Definitely here in the United States, but even worldwide. This was a service that the industry never had before. So now it is becoming more and more affordable for you to have your commercials advertised on television, even if you never thought about being on television to advertise your product or service. This is disruption. Now, I know in this episode I'm talking a lot about media, but I just want to show you that we're in a very, 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 very disruptive phase. That means the way things used to be done simply aren't that way anymore. Okay? So I'm going to give you an example. When I was growing up, we used to get a phone bill from the phone company. And my mother would say, hey, you have this, because we didn't have a lot of money. You have to make sure after school you go to the phone company and pay this phone bill or else they're going to turn our phone off, right? So all I had to do was take the cash and the slip, wait in line, and pay. Is there a phone company today? There's not one phone company. There are technology companies that do what? That provide internet access, that provide cellular phone service, that provide streaming services. The world has changed. So when we're investing in a company, we shouldn't go nuts as to whether the stock went up or down. You're making a long-term investment with your dollars that this company will continue to monetize all of these services that they offer and that they'll even be around in 5 years, right? There's some technology companies that 5 years ago don't even exist anymore. Technology is a very fast-paced sector. So you must pay attention if you own shares in Google and Amazon and other stocks of that ilk. Slower moving sector would be something like gasoline and gasoline refiners. So Chevron will be around. ExxonMobil will be around. There are disruptions going on in that business, but not in how computers and companies get their gas and how that gas is refined. The big boys make sure that they keep a stronghold on that. So if you're looking to get rich or get richer, the technology sector is for you. You want to start to acquaint yourself from a Wall Street point of view as to what's going on at these companies that are making all of these changes, because those are the stocks that you want to own. You know, essentially, and I want you to really understand this, there's really two types of people who invest their own dollars in the stock market. One is for wealth accumulation, people like you and I who just want to get richer, richer, richer. And then the other is for wealth protection. So if you're trying to get $1 million in the stock market, you're probably listening to a show like this. Hey, Tyrone, how can I get there? What is it I can do? Where are the stock splits when it relates to technology? If you have $10 million or more, you might listen to this show, but you've already made it, right? So you're probably listening to a show that's about wealth preservation and lowering your taxes. My audience is into wealth accumulation, and that's who this show is intended for and is crafted every week for. So even if you don't know anything about the stock market, you listen to 5, 6, 7, 8, 9, 10 episodes, you get motivated because you understand where the stories are. Now, at the time of this recording, Google is only around $105 a share. It will not be there for long. Why? Because of that massive stock split we saw not too long ago. We also saw a huge stock split in Apple shares, right? And in Amazon shares. These shares are at a low that you won't see again in the next 10 years. I'm not telling you to run out and buy hundreds of thousands of shares. Not at all. But these companies are on the forefront of disruption. Therefore, if you get in now, you'll actually be creating wealth for the future. So here's one of the things I really want you to take away from our time together today. Okay? Because this is a private session between you and I. You don't have to pay for this, so you're already winning. Okay. Here's what I want you to remember. The companies that just had these massive stock splits over the last 24 months, they are the disruptors of technology. They are the leaders in their field. And one of the reasons that they split their stocks is so investors like you and investors like me would find the shares appealing And it's that appeal that will drive up the stock price over the next 5 years. There you go. That's your keys to success. Be patient. Getting rich is a process. It's not going to happen by next week. It's not going to happen by next Christmas. But over time, 2, 3, 4, 5 years, you will certainly reap the rewards. I'm Tyrone Jackson, the Wealthy Investor, saying if you haven't downloaded my free ebook, go to thewealthyinvestor.net right now. Do so you can learn some of the upcoming trends that above and beyond what I talked about in the show. With that, one love, and I'll see you next week right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.